Welcome, everybody. Welcome to my webinar, broadcasting live from Mexico City. Today is Thursday, February the 9th, 2017. Welcome to your webinar, WoW Trades. This is me, myself, Alberto Alvarado. Let's begin. Okay, a little bit about me. Well, this is me, myself, Alberto Alvarado. I started trading the markets for more than 11 years. I started precisely in 2005, where my first live account I lost in less than a month. But that left me the experience that the trading world is exactly what I wanted to do for my lifetime. So I decided to take my trading education, self-education seriously. And by 2007, I was able to start grasping the first results of my efforts and hard work. Just to see my account evaporate again in 2008 because of the financial crisis we had at that moment. And then at that moment, I had to decide at a very high personal cost whether to continue or leave it. I decided to continue. But what the 2008 crisis left me as an experience is that what I thought was my edge was not complete. So I decided to integrate my edge, the subjective creativity, intuitional elements to it, and it ended working very well for me. Besides that, I use traditional tools like the technical analysis, the MACD stochastics, RSI, fundamentals, and what you will see during the webinars is the exact combination of that. And wishing that this could help you to develop your own trading approach to the markets. For the ones that haven't subscribed to my YouTube channel, I strongly suggest you to do so. You go to YouTube and in the search box, you type what is here, IIBB's Training Room channel. This will show up my picture and you click subscribe. Well, for today, we're going to have a very different kind of webinar because I will be focusing in three different chartist patterns that showed up recently that could mean some trading opportunity insights for the ones that are willing to do their own analysis by their own, of course. But watching weekly the markets, I believe that these are very nice and good-looking setups for analysis. We're going to review today three of them: the New Zealand dollar, United States dollar, a triple top that showed up in the 4-hour chart, and reading it in context with a 1-week descending channel bullish breakout that happened last week. And at the end, we will talk about the euro dollar 4-hour ascending triangle breakout. But before turning to the charts, I'd like to review a little bit what are the fundamental aspects of this week. Well, for the ones that are informed, in April, we will have the French presidential elections, and Marine Le Pen, it's a far-wing right-wing candidate. She has already been outspoken on that she wins the presidency. She will ask to have a referendum like the one they have in the UK to decide to know if the French people want to continue or not inside the EU. This represents a lot of risks, in my opinion, higher risks than than the one that Brexit held, because France is way more integrated and dependent on the EU. In the same manner, the EU depends way more from France than from the UK. So any movement moving France outside the EU could have contagious and tsunami consequences. We need to remember that in any case France decides to leave the EU, first of all, we really don't know what kind of Brexit that would mean, hard or soft. Everything indicates that if for some reason Marine Le Pen wins the presidency in France, Uh, you shouldn't be talking about having a soft Brexit, but a hard one. And the next foreseeable thing after that happening maybe would be the crisis that will propagate inside mainland Europe, starting with Greece, of course, and Italy, and then propagating to other parts of Europe. So, just as a comment, we need to be very aware if we decide to open trades, etc., on this situation, because if you're not trading at binary options and binary.com, after weekends, the risks are higher of having a huge gap against you that could simply wipe out your account. So the more in how to say it, if you can decide whether to trade with other instances that maybe you are trading also, try to use in this case way more binary.com binary options, because these are settled from the very beginning. I mean, uh, no matter if the market goes 1,000 pips pro or against you, you already know exactly and no more what you could lose and what you could win. So trading under this uncertain circumstances, very particular, trading and binary options in binary.com is the way to go. So consider maybe thinking creatively how you could adapt the trades that maybe you are taking in other instances to move them to binary.com, because yes, it's a time where you need to be aware that leverages, margin calls, huge gaps at the weekends could happen more and more overall if Brexit happens. Let's just remember the huge movements after Brexit. So just consider that from now on. And if you want to play it safer, binary.com is the way to go, okay? Well, first of all, what I want to talk about is the New Zealand dollar, the United States dollar, because last week, during the last 2 weeks, we had a breakout to the upside on a weekly descending channel. And I want to explain you the potential trading opportunities that this could mean. After having, let me switch to the weekly directly, and then we come back to the 4 hour. This is the weekly chart in the New Zealand dollar. You can see we have here a descending channel. And this is last week during 2 weeks, as you can see here. The quote of the New Zealand dollar, United States dollar, also known as Kiwi, has shown strength breaking this resistance. What you can see lately is the price moving down. This is a mixture of aspects, so we were going to talk about them when I come back to the 4 hour chart in the Kiwi. But as you can see, this what was the resistance that was respected here and here. Now it's been broken. Now the market is retesting this line. So here opens opportunities for the ones that would like, for example, consider a bullish trade. But I need to make some comments on the ones that really want to do that. Okay, but well, for the ones that are interested in looking trading opportunities in the Kiwi, check out this weekly trending line that's just been broken this last 2 weeks, and now we are just retesting it. Okay, have that in mind. Let's go back to the 4 hour chart in the Kiwi. Well, this 4 hour chart is showing us a triple top that just formed in the 4 hour. This is the first top, this is the second top, and this is the third top. Hours ago, we had the Royal Bank of New Zealand stating on interest rates. Actually happened what it was expected, that the Royal Bank of New Zealand kept the interest rates as they were. But what really spooked the markets was the speech that was way more dovish than expected. This is aligned with the latest tone by the Royal Bank of Australia some days ago, precisely doing the same and being dovish on the speech after the rate decision. So this is disappointing a lot of traders and investors that maybe were uh, considering that the New Zealand economy could have a more hawkish approach, because we need to remember that after Donald Trump's winning the presidency, and we have some years, some millionaires moving to New Zealand for geostrategic risks, and after Donald Trump winning the presidency, some millionaires are just willing to move outside the United States. That could mean a lot of investments in New Zealand. So what I believe is that the investor were expecting that maybe that could have a role in the next monetary policy in New Zealand, but apparently it didn't. So that is why we had this very, very obvious sell-off. Okay, this is when the New Zealand central bank decision took place. And you can see this triple top that, by the way, usually it means it's a bearish setup, not necessarily always. Overall, when you check out the latest 2-week price action and technicals, you will see that the bullish momentum was very healthy up to this moment. Up to the moment, the Bank of New Zealand simply disappointed investors. So if you sum up the breakout of that descending channel in the weekly chart, let's remember, weekly chart is not noise. Neither the 4-hour chart, but breaking something in the weekly chart is meaningful, even for the year to come. Okay, so what it was expected is that maybe that breakout could continue. In any case, the Royal Bank of New Zealand gave the investors said the investors what they wanted to hear, but it didn't happen. So even though being a healthy movement, as you can see here, is the 4-hour chart, it's being straight upwards in almost a 45 degrees. But up to here, well, this happened. This is the bottom line of that triple top that showed up again. First top, second top, third top. And you can see now that the market just broke this. So here are some potential trading opportunities, but you need to listen carefully. That is why I showed you first the weekly chart. We are now at this very level, testing a major support at weekly charts. Okay, so that means that mid and long-term investors would try to start buying. But let's remember that their interest is not the same as a small speculator like us. They could start buying and buying even if their positions continue being red and more in the hole and going even lower, because their interest is to consolidate big volumes to the upside in any case that they want to go bullish in this. So this comes and this is why trading the New Zealand dollar is tricky, but it represents good trading setups, because we are now first retesting this weekly. So when you go and do your own analysis, use these both references to whether to go up or down. So don't ignore overall the weekly setup. So let's imagine we are just retesting now at here, the weekly level that I said, and we just broke this triple top bottom line. Technically, and if you go to the books, what you can expect of this kind of pattern is that the price will rise to the 72.30, more or less, and then it will continue moving down. That is what you theoretically can expect. But you see here in the other chart, in the weekly, that here we're retesting the lows, that trend line that was recently broken to the upside. So what you can expect here, and what I expect the New Zealand to do, is to, for example, retest this or something like this. And if you find maybe confirmations, and if you decide, and after your analysis you decide to go bear in this, maybe the market could retest this low again and then jump above, and then do this again and then jump above. Why? Because here we have in this weekly line that will go more or less here, the market and a lot of participants willing maybe to buy and to buy and to buy, bringing both bulls and bears opportunities in a very at least now it's a very narrow range, but it could tend to increase. You see, broadening. So this is the potential trading setup that we can that we see for the next maybe days or even weeks. You need to consider that this 4 hour lowest line of this triple top, besides being in the in the 4 hour that is not noise, you can more or less rely that in order for this to be really broken, you need to have maybe at least the market getting again to the 73. So that gives you a range of error. I mean, if you short something here, you need to consider that it could go even to the 0.73 and still open room to make this move to the downside and then allow the more long-term traders or investors then to buy cheaper. Then the market could wave up, giving more or less here or up to the 73 to give chances for maybe the bears to short there and then give more chances for the longer term buyers to buy in this trend line, the weekly chart. So your job now is that if you haven't watched the Kiwi, because even though it's a major currency, let's accept it. It's not the most popular one because we usually are looking for very volatile instruments to trade if you are a trader, overall a short-term trader. But in this case, it's worth watching it because these very two aspects showing up. For the ones that are expecting that the New Zealand dollar will break below that weekly trend line, that would take a lot of effort from the markets. Having this triple top in the 4 hour chart gives you the certainty that the quality levels that the market will try to respect here are equally high in the 4 hour and the weekly, because the weekly one is going to be eyed by investors that are not really eager to close their positions today, tomorrow, in 3 days. They are investor type. So your job again, your homework, if you want to call it that way from now on, is try to mix what you find in the text, in the technical analysis, in the price action, in the lower time frame support and resistances, and try to fit that into your own conclusions on the next move on this, but respecting and always watching the weekly and the 4 hour, these kind of levels, because this could get very interesting and could generate opportunities for the ones that make the correct analysis, okay? So I'm just handing you this because I really find very interesting this, because usually the New Zealand dollar doesn't bring us this kind of things. Usually the New Zealand dollar is kind of straightforward up, straightforward down, or complete range bound. But here the action is going to increase the time. The more time it passes, the more volatility we could expect. So just to have an eye on it, okay? And maybe this is the most important that I wanted to talk about. This is the euro dollar. Why the most important? Because as I just explained, the Brexit risks, the France exit risks, are getting, I don't believe, higher than what the markets really considered. Because after Donald Trump, first of all, after Brexit happening, it was obvious that in Europe, the anti-EU sentiment could propagate. But after having Donald Trump being elected, it was the chances of having what they like to call populist movements in the world is spreading is higher. So even though the markets are aware of those risks and they are not caught by surprise, if we follow the price action pattern after the referendum on the Brexit, just after the final results is when we had the massive movements against the pound. Okay. So I expect the same here. I really don't expect massive movements up to having maybe, first of all, maybe Marine Le Pen winning, and then after the referendum. I sustain the speculation that after Brexit, we could see the euro dollar quote tumbling to the parity in a matter of days. But we shall wait and see. In the meanwhile, the market is gradually factoring in this risk. And again, risk equals reward when you are prepared and when you know how to read the price action and how and do your home diligence work. This is important. In the euro dollar, this is the 4-hour chart. This is an ascending triangle that was just broken 2-3 days before. Here is clear. Check this out. The first retest was here. Then we retested the lows. And then the market tried to touch again this, but was shy from it, and now is here. Of course, the fundamental risks on trading euro are to the downside. That is a no-brainer, and everybody knows it because of Brexit. But we have to learn from the experience before Brexit that the real movement happened just after the final results of the referendum. But that doesn't mean that we could expect that maybe the euro just range bounds from now on. No. This is the first signal of weakness. If you rather decide go bull on euro dollar, with this, you are warned that the risks are against you. Why? Because the fundamental risks. So in any case you decide to trade bull or bear this, you need to consider this triangle. Example, if you decide, for example, because you look for information in the minor time frames, and you say, okay, I'm going bull on euro because I expect maybe to retest this line, but never imagining or dreaming unless the market tells us so. But since this is the 4-hour, we can expect that this pattern will be respected for some days on. So if you decide to go long, never ever, at least not before this triangle is denied, to believe that your take profit target could go to the 108, for example. This line, you need to watch it as, let's say, the maximum acceptable take profit target. Because if you get too greedy, and because this triangle and this breakout is aligned with the fundamental current situation, don't be surprised that maybe you are shy, the market gets again shy to this level, and then boom, sells off. Here, as you can see, the support was broken. So the first target here is this low. That is pretty much a 106.25. And then we could go even lower. But here we have a clear signal in the sun for the ones that decide to go long. But if you decide to go long, you need to use very tight stop loss approach. Because if you're wrong, you're trading against the fundamental sentiment. In the other hand, if you decide to go bear, maybe you have fundamentally on your side, so you can get a little bit, if you use, for example, at binary.com, a no-touch option, you can, for example, put it at 1077. Because you know that it's, even though it's larger, you have the probabilities on your side just because of the fundamental bias on Brexit. And then you can expect maybe that the market could go even here or even lower. In what depends? Your style, your knowledge of the market, your interest in the market, and the kind of trader or investor you are. But this, again, I am just handing you this information. In any case, you decide to, if you decide I'm going to trade euro dollar in whatever direction, the one that you want, you need to watch at least this 4-hour chart. Use it as a base to make your calculations. Maybe you go to the lower time frames and you find a bullish opportunity. Then you know that, for example, the market was shy of testing this first obvious take profit target. So maybe if you're bull, you're not maybe willing to put a stop loss here because that wouldn't make any sense. It would be way better than maybe you consider to go short. If you consider to go long, you need to consider that the potential reward is up to here, and your stop loss should be like in here. In this situation, for example, of course, this can change in the matter of the week, and according to the price action, the new news to start flowing in, this could change. But this is only a line in the sand that I'm bringing you to give you more certainty on the information that you need to consider whether you are bull or bear. Okay. So I believe that that's going to be everything for this webinar because unless we have a change in the fundamental approach by Donald Trump on economics, the markets are, and I said in other webinar, that I was expecting that Donald Trump effect have a fundamental uncertainty uh, factor. But the thing is that now we have both. Even though apparently Donald Trump is kind of being forced and pushed to measure his words, his approaches, etc., now we have Brexit risks. So the markets are really not feeling comfortable trading neither under Donald Trump because the markets are still figuring out what is next, what he's going to do next, and now we have to consider what's going to happen in April in the French presidential election, and then if Marine Le Pen wins, when the referendum will take place, and whether if the referendum could be pro or against the EU membership. Let's remember that during Brexit and during Donald Trump, all the polls failed. Why? The polls are simply mathematic ways and statistical ways to measure opinion. But of course, opinion in people change. It's like the markets. So polls are always behind the curve also because those are mathematical models. So yeah, we really don't have any reliable tool so far to try to forecast if Brexit could actually take place. That is why I am approaching you these two very clear, straightforward scenarios. One in the New Zealand dollar in the weekly and in the 4 hour. And the other one, the euro dollar in the 4 hour and the fundamental long-term bias. Because maybe those are the only worth watching assets for the next week because all the rest are just defying principal support or resistances. At least euro broke a 4 hour chart. And at least New Zealand now is retesting a weekly support. So yeah, maybe if the markets are doubtful, the ones that are taking that step forward already are these two assets. So check them out. Remember to do your job, your due diligence analysis, and whether you go bull or bear, always consider these trend lines and what they mean, what I just explained you in the latest minutes. I would like to thank everybody for showing up, and I would like to thank Sharice, as always, for hosting and for recording. Remember that our next webinar in English will be Wednesday, February 15th, 2017, of course. And the next Spanish webinar for the ones that are Spanish speakers is going to be on Tuesday, March 7th. But in any case that you are only an English listener, I expect you next week. And remember to trade safe, be safe. This is Alberto Alvarado. Hope you enjoyed your webinar WoW trades, and bye-bye.